Hello again. Welcome to another episode of the Uranium Market Minute. Today is Friday, April 29th, and this is episode number 113. My name is Justin Huhn. I am your host. I'm the founder and publisher of the Uranium Insider Pro Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing that you see or hear in this podcast is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. Okay, end to another exciting week in the uranium space and in the markets in general. Markets are quite frothy. Nobody wanting to be long the S&P going into the weekend. We have the Fed meeting coming up next week. It's just a frothy time in the markets, and uranium actually is doing a decent job, all things considered, even though we did close the day down. We didn't close at the lows of the day or the week, but I'm going to show you when we go over the charts a couple of things that I'm seeing that I think are noteworthy in terms of correlation to the broad markets. I do have a couple of pieces of news that I want to talk about in the mailbag section, and also wanted to remind everyone, if you are a Uranium Insider Pro member, you will be receiving the May monthly newsletter on Tuesday the 3rd. That is next Tuesday. We'll be issuing that May newsletter, and there's a lot to discuss, and I'm going to talk about a couple of those bullet points also in the mailbag section. All right, so why don't we go ahead and jump right into it. Spot price actually of uranium up today. In fact, it just jumped up about 5 minutes before I started recording here. We're now sitting at about 53, just over 53.50 a pound mid-market, 53.75 a pound mid-market. That's up over $1. Nice to see a little bit of action come into the spot market after it got smacked down pretty hard at the end of last week. I've mentioned that repeatedly. If this is the first episode that you've seen of the Uranium Market Minute, then I'll repeat this briefly. But I did mention there's frequently month-end shenanigans that go on in the spot market because there are traders, uranium traders, that have forward month pricing on their offtakes from producers that are based upon the month-end closing price. So when the conditions are right, and in this case we had a full-on risk-off environment across commodities. This is last Friday. We also had SPUT basically almost out of cash, not raising cash, and not really much of buying pressure whatsoever in the spot market. Therefore, the market was ripe for manipulation, and we did see the prices get smacked down pretty substantially at the end of last week. We also heard about some issues with shipping uranium that was held on shipments coming from Russia, where traders were not sure about the future of that material and selling that off into the market. That's unconfirmed. It was something that we were hearing. Either way, the price got smacked down. It actually, last week, was the steepest 1 week decline in over 30 years in the spot market for uranium in terms of percentage. So that was a pretty big smackdown. But honestly, all things considered, uranium is holding up relatively well, even with that smackdown here. And perhaps we needed a little bit of a reset as we came into the news yesterday about the SPUT NYSE listing getting rejected by the SEC. I have a really interesting thought around this that I'm also going to share in the mailbag section. Okay, spot price is up. SPUT did not raise any capital, but they did actually buy 100,000 pounds of uranium. I'm actually surprised to see them do that because they're now down to 22.6 million in cash. That's around less than 1% of their NAV. We expected them to hold on to a bit more cash. I don't think they will be using any more of that cash for buying uranium. So possibly they are confident about flows coming in going forward here in order to continue to draw that cash down. So going over, let's see, the physical trust now, they hold 55.5 million pounds. Now that they add another 100,000 pounds yesterday, 55.5 million pounds. Their NAV now sits at just below 3 billion, 2.93 billion. That's about 500 million decline just over the last week and a half because of the decline in the U3O8 price. Significant. SPUT's 2022 year-to-date total, 14.2 million pounds purchased, 748.6 million in new capital raised, and they have been out of the market in terms of raising new capital for 13 consecutive trading days. It's almost 3 weeks. Significant. Yesterday, they closed at a 2.72% discount to the net asset value. I believe the trust actually closed in the green today, but spot was up. Likely they did not issue any new shares into the market or raise any new cash. Going over the ETFs, let's see here. URA or URNM, they both reported no change in outstanding shares. So despite the sell-off, we're seeing very little change in outstanding shares, which means that the selling of the past couple of weeks has not been coming from the ETFs themselves. Therefore, the selling pressure on the ETFs has not been leading to this sell-off. When the ETFs get selling pressure that's greater on balance than the selling pressure that's coming into their individual holdings themselves, they will trade at a discount to their net asset value. They will then sell down the holdings themselves, raise cash, buy back shares. Those are share redemptions. Those happen typically in bear markets or on heavily traded down days or potentially weeks. We saw a little bit of redemptions in December, a tiny amount in January, but for the most part, since this bull market started, the ETFs have, on balance, issued way more shares than they've redeemed. In fact, the share issuance this year to date alone between the two ETFs is $750 million worth of mandated buying. And that's unbelievable that the flows continue to come into these things despite the trading action of the stocks, which has been overall pretty flat year to date. We've gone down. The first month we went down mid-February through mid-March. We had a pretty good rally. We pulled back again. Now the S&P is down, I believe, about 13% on the year, and we are relatively flat on the year. So I'm going to show you that in the charts. Actually, why don't we do that right now? Okay, so what I wanted to show you, this is URA trading down just over 2% on the day. Pretty nasty day, got rejected. Like I said, we were trading up pretty well on the day. Then the broad market started to turn over, and there's just a lot of jitters across most markets right now with everything that's going on, Fed raising rates, the war, et cetera, et cetera. But I wanted to show you this chart again. I did bring this up the other day. This is URA as it trades relative to the S&P. You can see we actually closed in the green today relative to the S&P. And if we zoom out, we can see that this trend is firmly established here. We are above the rising 200-day moving average on this relative chart. And this looks like a bullish chart. It looks like we are making a higher low in terms of uranium trading relative to the S&P. It's like, all right, great, Justin. Well, even though I'm down less than the S&P, I'm still down. Yeah, I get it. But what we're talking about here is when markets are churning and they're chopping, if you actually zoom out, we are looking for something to outperform the broad indices. And if we look at the weekly chart of this relative chart, it's even more striking. You can see essentially since its inception, URA has underperformed the broad market. Of course, its inception was in 2010. So this is just a few years into the recovery of the broad markets after the great financial recession of 2008. And so now we are in the early innings of this outperformance of the broad markets, and we have a long ways to go in this, and everything is setting up, in my opinion, for a very strong very strong bull market for most commodities, and uranium especially, because I believe that we are going to be an outperformer amongst most commodities. Let's look at the daily chart here of the Sprott Physical Uranium Trust. Like I said, it did trade up 0.54% green on the day, had some dip buyers come in, probably a better looking chart relative to most other charts in the space. Cameco traded down 2.2% today, did not close at the lows of the week, so that's a positive thing. Cameco's Q1 conference call is next week. We look forward to listening in on that to hear some insights from the guys at Cameco. All right, so mailbag section. I had a question come into me about the United States Department of Energy, in particular the Secretary of Energy, Jennifer Granholm. She was speaking on Capitol Hill yesterday, and there were a couple of questions around interpreting what she had to say and how important that is. Okay, so basically, it's clear that the Biden administration understands the energy pinch here. We're now in the critical importance of energy security stage, and it's come to the forefront, particularly with the proposed bans on importation of Russian energy products. And that obviously is not just in the United States. There was news today that Germany has come out in support of the EU banning Russian uranium products. Although that's a relatively easy thing for Germany to say, because they now have only 3 operating reactors, which still now are set to close down at the end of this year. Whether or not they reverse course on that is yet to be seen. I'm not holding my breath on that one, although I can't think of anything that's ever been more obvious than as a no-brainer move for the country of Germany to not only keep those 3 online, but to restart the 3 they just closed in December that have yet to be decommissioned and are perfectly capable of restarting. What else did we hear today? Gavin Newsom, our hero governor of California, spoke to I believe it was the LA Times. It might have been the New York Times. I apologize. I don't have that right off the top of my head here. Either way, he is saying that he is going to seek funding, supportive funding from the DOE to keep Diablo Canyon, the last operating nuclear reactor in the state of California, online. This is set to be decommissioned starting next year against all logic. And there have been some very, very sharp, very hardworking proponents of nuclear. Most importantly, that would be Michael Schellenberger, who actually is running for governor of California, and Mark Nelson. These two have been advocates for keeping this plant online. And while this isn't confirmed that it will stay online, the fact that the governor is stating this, unless it's an obvious political move, he's up for re-election, of course, at the same time. And energy prices in California are going through the roof. I just paid my electricity bill yesterday. It was extremely high. We have not been using the air conditioning. And gas prices are through the roof. It's necessary for them to keep Diablo Canyon online, but the political agenda in this state is absurd, to say the least. And that is a surprise to hear him say that. So if California keeps Diablo Canyon online, not only does that change slightly, supply and demand forecast, right? So that's demand that nobody was pricing in, that Diablo Canyon get extended. Nobody. Maybe the high case from the WNA would consider something like that. But so that would be additional demand for uranium, of course, if they do extend that. But most importantly, that's a major, major signal to the global markets that if California is willing to keep this reactor online and recognize its importance and the importance of clean energy coming from nuclear, nobody has any excuse to prematurely shut down a reactor that's operating safely. So that would be a really big deal. Okay, back to Jennifer Granholm, Biden's Secretary of Energy. So basically, she just came out saying that they are even reconsidering the strategic uranium reserve in the United States. This is something that was proposed by Trump's nuclear fuel working group that came as a result of the Section 232 petition that was put forth by Energy Fuels and UR Energy. This working group came up with, they basically denied the request for mandated buying coming from the U.S. utilities from domestic producers. That was the proposal, was 20% of needs of the nuclear fleet in the U.S. to be purchased from domestic miners. That was denied. Quotas, excuse me, that's the word I was searching for. They denied the quota proposal, but they did recommend that the government in the United States establish a strategic uranium reserve and purchase that uranium only from domestic miners. The U.S. DOE is reconsidering that and is considering utilizing funding from the latest budget to establish and start to build that strategic uranium reserve. That's in addition to the $6 billion in funding that has been confirmed for aiding nuclear reactors that are on the edge of profitability and would be threatened to shut down because of that economic viability. So the US, as the largest nuclear fleet in the world, and I'm not talking about that just because I'm in the US and it's the largest investing market, it's the largest nuclear fleet in the market. So the way that the US acts in relation to nuclear power is something that the global stage will be, the global community essentially will be watching. So that's a really big deal. And of course, we're going to get more detailed into that in our upcoming May newsletter. So I wanted to let you know about some topics we are going to cover. I'm not going to give you details on these topics, but just bullet points to let you know what types of fundamental developments we are going to be discussing in this month's newsletter. SMRs, a thorough discussion on them, why we're so bullish and how we're playing it. SMRs are very, very exciting here. The SMR stands for small modular reactor. If you're new to this space, this is a technology or a type of technology that is being embraced and is very exciting. It's being embraced by a number of countries around the world. And this is something that everybody is watching, and we're very, very excited about that. And there's a lot of developments on that front that we're going to be talking about in the newsletter. Two, we're going to review the WNA Nuclear Fuel Conference. So we attended this digitally. This was 2 days ago. It was held in London. I wish we could have gone in person, but schedules did not allow. A lot of very interesting insights came from this conference, and we're going to detail those out in the newsletter. We're going to go into the recent sharp sector sell-off, how to think about it, how to play it. There's a lot of reasons for this sell-off and reasons why we are not actually all that concerned about it and what we are doing about it. For the continuing ramifications of the sector of Russian bans, this is a really big deal. We continue to see more and more language come out of multiple governments, not only the US, but across the EU. So, and the war in the Ukraine, unfortunately, continues and seems to be escalating. I don't think we are going to be going back to how things were in January, potentially ever again. And I think that whatever implications that are on Russian uranium currently and are potentially going to escalate are likely to stick potentially for a very long time as we shift away from this sort of globalism towards nationalism. And lastly, we're going to review all of our focus list positions as we do every month. So whether I don't know how many times I've mentioned this. If you're not a member, we have a focus list of positions. That's currently 11 positions. One of those is an options trade that actually has outperformed much of the sector during this sell-off. We have a very intelligently structured options trade that is significantly outperforming the underlying common stock. And that's what we're looking for, is low risk leverage through these options trades. And that's something that we will continue to trade in and out of during this bull market, regardless of whether or not we are holding for the long term. The equities that we hold, the options trades obviously have expirations. So that'll dump some cash into our account at some point, and that will be reutilized probably in another options trade. So that's something that we like to add as a bit of a value add to our members. All right, so if you are not a member and you are interested, in the description below, you can click a link to get a free sample of a previous month's newsletter and get an idea about the type of content that we put out. If you do appreciate these videos, please like the video, share it around, subscribe to the channel, hit the notification bell, and you'll be reminded whenever we publish a new episode, which is almost every day. I hope that you all have a great weekend, and we will see you again next week. Cheers.